Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 1st of February. My disclaimer, it is for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and transfer it to your own charts. I'm not here to issue trading signals. This is a video for paying subscribers at CTM The Bigger Picture.subset.com. It's published on YouTube after a delay of a week. All right, great. Let's have a look at ES, where we were, obviously we've got this nice looking little level top here, and we were retreating towards the end of the week, which was expected because the last 3 days of last week leaned bearish, and while we saw a new all-time high on Wednesday, Thursday and Friday were pretty much as expected. Now, I'm just going to go through quickly next week. Now, next week is rather different because we've got a very bullish lean day on Monday, which is the first day of the new month, of course, and February is one of those months where you get very bullish first days. Then we got a bullish day on Tuesday, about 71% bullish. We've then got about a 60% bearish day on Wednesday, and another 71% bullish day on Thursday. 57% bullish on Friday, so mildly bullish. But basically, we got a fairly bullish week, and I'm looking to see what happens with enormous interest. I am thinking we are going to see some bullish action. I am thinking particularly that we're probably going to see a retest of the high on NDX, but I'll be coming to that on the daily charts. In the meantime, nice looking double top here, and what I'm wondering is whether a bullish week, if we get a bullish week, because obviously it is subject to news, and the news hasn't been awesome, frankly. But if we get a bullish week, does this double top setup start coming apart? NQ, we didn't quite make a new all-time high on NQ. We made one on QQQ, but we didn't make one on NDX. We came very close and just missed. What I'm expecting to happen next week with bullish tape, especially, is this week. Tech finally started leading again, so I think we're pretty well set up to get a new all-time high on NDX. That's what I'm looking for. That's we came very close to it. We even got a new all-time high on the Qs. But I am thinking that's one of the boxes I'd like to see checked off. And we haven't quite seen it yet. Looking at RTY and YM were both trading last week. This could easily be a bull flag on YM, and this looks like a bullish triangle, not a perfect one, but a pretty decent one on down. Now, it could be that this is going to break down rather than up, but if this continues to form, and if we can respect the monthly pivot and the last higher low that we saw here, of course, this kind of thing can actually expand into a full flag, in which case, of course, maybe come down to 47,750 or something. But if this triangle continues forming, I'd be looking for a move up to resistance, bit of a pullback, and go. And retest the all-time high there too. Looking at DAX, this could very, very easily be a bull flag, and ESTX, this could very, very easily be a bullish triangle. So, I mean, just on the historical stats, I'm leaning bullish for next week, and we will see how that goes. All right, I've introduced a new chart this week, and that is the Nikkei chart. And Nikkei, well, that looks like a bullish triangle too. So, I've actually been tracking this for a couple of days just after we made this low here. Obviously, this would be the A, B, C, D, and then we'd see a bit of a pullback and go. So fairly similar to, although slightly ahead of where we've got Dow here. So this is a pretty good setup to see a retest of the high on Nikkei as well. All right, let's have a look at those on the bigger picture charts. Okay, SPX. SPX, we've not got anything to see. I haven't talked about the SPX ADP chart for months, and that's because we haven't actually got close to either the top or bottom black lines in months. So last time we saw a hit was July. So drifting higher over time, but to be honest, we haven't really made any really significant progress since October, and we could be topping out. Looking at ES, we saw a retest of the all-time high. We've got a nice looking little double top here, and I'm going to be watching next week to see whether that survives. We've seen we've seen a number of tests of the daily middle band recently. We saw two on Thursday and Friday last week, but both of them held it at the close. Looking at the hourly chart, no current divergence. Nice looking little level top, as I mentioned, and an even closer view of the nice looking little level top. No other divergence. In terms of this rising wedge coming up from the November low, this is nice, and this is a breakdown classic topping pattern. This is a pretty nice looking top. We will see. Now, NDX, as I said, we came very, very, very close to a new all-time high, but we didn't quite make it. So we will see how that goes. I think the high here is at 26.2k, and the high we made over the month was 26.165. I think this is rounded, but I think the previous high was about 20 handles higher, which is very, very close, but no cigar. In terms of the daily chart here, again, we were seeing some pretty aggressive backtesting of the daily middle band last week on Thursday and Friday. And we made obviously a marginal higher high here. We do already have a pretty good looking large double top on the Qs. Although I've got to say, I'll be talking about my reasons for it later, but I'm thinking that that we may be seeing another 3 to 6 months of sideways to up action. And I've got a theory for how that might happen in conjunction with the crypto charts, which I'll be coming to later. On the hourly chart, no current divergence. Nice looking little rising wedge here. That was a potential bearish overthrow there. So I'm watching with interest to see whether or not we're going to see a break below this trend line. I'd like to not see that before we see a retest of the high. This is a close-up of that wedge. You can see here I've traced in a possible alternate wedge there, but we didn't quite make it to the resistance trend line, so I'm going with the original trend line for the moment. We will see how that goes, but it may be that we're going to see another move up, go a bit higher, and actually make it to that trend line, so I've left it on. Okay, Dow. We've obviously seen new all-time highs. This has been leading. We've got a beautiful wedge from the April low, and that is very, very nice, but you can see we didn't quite make it to the wedge support. I'm wondering if we might just quickly knock that off on on Friday morning, or possibly see a slightly break below it. We've got an RSI 14 buy signal fixed here. Hasn't really been doing a great deal, but this is setting up, I think, potentially for a retest of the high. And we will see how that goes. You can see that this was actually fighting a longish battle with the daily middle band and lost it in the last 2 days of last week, and closed 2 days below, and actually reached the daily lower band on Friday. Obviously, if we're going to see a retest of the high, we're going to need to see a break up. In terms of the equivalent triangle to the one we are looking at on YM, this is a nicer one, and it looks pretty damn good. So this is holding the support for the time being. This would be obviously the D wave here, so I'd expect to see a move up, get pretty close to a new all-time high, see a bit of a pullback, and see it and get the new all-time high after that. We'll see how that goes. All right, great. Let's have a look at the IWM chart. Okay, IWM again. We've got a nice looking setup, though not as nice, from the April low. This could be a bearish overthrow, but I am thinking we might possibly make it up to one of these higher trend lines here. We will see. Yes, Friday we closed back below the daily middle band, and obviously if we're going to see retest the high, we'll need to get back above that. The obvious time to do that would actually be tomorrow, which is of course a very bullish leading day. On the hourly chart, we've got a rising wedge from the November low, which looks pretty nice, and we could be about to see a breakdown, but we have hit rising support here, and I'm quite liking a potential move up from here. We have slightly broken that trend line, but then that was expected because we've slightly broken the trend line here too. No reason to think this can't go up, and this could easily be a bull flag. All right, looking at DAX, no current divergence, obviously still making not that long since we made the last new all-time high. We've come back down, and we are testing the 50 DMA, and my lean is we'll probably hold that and retest the high, but again, we need to get back over the daily middle band. Looking at Nikkei. Nikkei, we've got some nice looking bigger picture sell signals here. We've got a weak RSI 5 sell signal fixed here, and a full size one brewing, RSI 14 sell signal brewing here. I am watching these and thinking we might see a big reversal within months, but I'm thinking that for the whole market here really. In terms of the daily charts, we've got a nice trickle up the daily middle band here. On the hourly chart, obviously I'm showing this as a triangle, which is what it really looks like. It looks like a bullish triangle. As long as we're holding the daily middle band, I'm expecting this to head back and retest the make a new all-time high next week. So we shall see. All right, great. Let's have a look at the DX chart. Now, DX, obviously, we were having a pretty exciting week, and I've got quite a lot to say on that, and also on precious metals, because it was very interesting that we were seeing this big move down in the dollar while metals was skying up. And then there was a big reversal. Trump was making more noises about the Fed continuing to be independent, and he's selected a guy who isn't necessarily a political hack, although honestly he might be. But probably, and there were lots of noise being made that the Fed would be remaining independent, and that boosted the dollar, and also, very tellingly, really caused a big pullback in precious metals. Now, I had been wondering how much of the precious metals move was really down to a shift away from government bonds. Although we haven't really been seeing a big rise in bond yields, but the thing is a shift away from government bonds and the dollar in terms of something that has no counterparties. And actually, precious metals have now gone up sufficiently high that it could actually potentially credibly replace, and certainly if you're talking about the other precious metals as well, potentially you've got something which could replace the US dollar in precious metals, and that obviously could be pretty interesting. But for the moment, we are seeing a rally here. This could be a bear flag. We had a buy signal that made target, and I'm watching this area here just under the new monthly pivot at 97.2 to see whether we form an inverted head and shoulders to go higher. So watching that with interest. Let's have a look at the other currencies. The other currencies we've got on the euro, we've seen a very sharp pullback, and this could be a bull flag. On GBP USD, these both had sell signals which made target on Friday. Again, here we've seen a less sharp pullback, and again this could be a bull flag forming. USD JPY, nice move up. Again, wondering about a possible chest setup here. We've got a possible weak 6-minute sell signal brewing. Wondering about seeing a bit of a pullback here maybe, and then a move up. We shall see. On USD CAD, where we had a buy signal which made target as well, again sharp move up, not obviously anything, doesn't really look like a bear flag either. I'm wondering if we might see a reversal pattern form. Australian dollar, we actually had a little head and shoulders form here. That's broken down with a target in the 68.35 area, and the sell signal here has not reached target, it's reached the possible near miss target. But at this stage, I would be discounting any further move on it, really. In terms of NZ, this looks like potentially a bull flag forming. All right, let's have a look at those on the bigger picture charts. So let's have a look at US dollar. Okay, now bigger picture. And one thing I'm going to say on a post I'm going to write this week is actually this overall setup here, this move up from 2008, lows in 2008 and 2011, this move up here, lovely rising megaphone. This has obviously been forming for 15 years and has very little to do with Trump. Now it might be, obviously he's not been saying or doing anything which is particularly conducive to supportive of the dollar going up. But if we do see a breakdown here, then it isn't necessarily an awful lot to do with Trump. He just might be helping along something that was happening anyway. What I would say is, though, we've got a nice looking buy signal here, and these have an excellent track record, and this one's currently going nowhere. I'm not convinced it's going to go anywhere, but we have come back and retested the low here. We're at another inflection point. In terms of where we stand on that, we've got a weak RSI 14 buy signal fixture on the weekly, which I'm not taking that seriously. But we've now, we had a little level bottom. You can see that here, which broke up and which failed. And we've got a choice here. The first one is we could be forming a larger double bottom, and you see this happen quite regularly, which of course would potentially would then break up and give us a larger target to the upside. Equally, we could see a bit of a rally and go down, or we could just go down. Now, if we do go down, then at this point, I've discussed this a few times, at this point this bull flag here could potentially become the reversal pattern, in which case I've got a target down here which I've measured to, yeah, it's about the 80 area. And that pretty much was what I was expecting to happen within the next few years anyway, but it might be it's just going to happen faster than I expected. In terms of the daily chart here, nice looking potential double bottom if it can hold here. If not, then we could be looking at a sizable move down. Would that mean the apocalypse? Well, not really. It didn't feel like the apocalypse. Well, obviously the financial crisis was a bit of a downer, but down here, these are normal ranges, and you can see back in the 70s, we were back in the low 80s, and I think we were in the 70s there at some stage. 1970s, 1990s, 2000s, early 2010s. These are not areas which have typically been areas where there has been a major disaster for the US dollar. These are just moving around within ranges. I've been looking for a top here for quite a while, and it might be that it's going to play out faster than expected, but getting down to 80 does not mean that the American economy and the American currency have fallen apart, although there will no doubt be quite a lot of dramatic people arguing that is the case. Now, of course, that bull flag isn't alone. We've got matching bear flags on both the EURUSD and on GBP/USD. Now, these haven't actually convincingly broken up, just as that one on USD is not convincingly broken down, but obviously there is an opportunity to do so here. And I'll be watching that carefully. In terms of the daily charts here, nothing in terms of divergence on the Euro chart, and we're not going to get an RSI 5 sell signal here, but if we retest the high, we could still see an RSI 14 daily buy signal. Sorry, daily sell signal. Same again on, no, we could actually get both of them on GBP/USD, which is less hard off the high. We had a nice looking flag here, broke up, retested the high. This could be a double top. In terms of the Euro, not as nice a double top, but again, this could be a double top too. And it looked incomplete without this retest, so I'm quite fairly happy to have seen it. And we've got better topping patterns here on the Euro and GBP than we had before. Doesn't necessarily mean that we're going to see a big move up in the dollar, but we will see. Strange things, well, frankly, happen all the time nowadays. So USD/JPY, there was some government intervention here to prevent it reaching my retest target at 162. It still might make that. There's some interesting charts. I'll be posting one as the chart of the day here. But we are likely to see a rotation out of the US dollar into yen, because the yen carry trade was all about basically a weak currency and a weak a very low government bond yield. Now they've tried to juice up the economy somewhat. That's driving inflation up. It's driving yields up. So their yields are actually starting to behave like a normal countries now. But if that's the case, then they don't necessarily need to invest their money in US treasuries to get a yield, because actually they can get a yield at home now without any currency risk. So this is likely to be weakening demand for US treasuries and the US dollar, but again, it's not exactly the apocalypse, I don't think. In terms of the daily charts, no current divergence here, no obvious pattern, and I'm wondering about a possible retest this high, which could give us a topping pattern potentially. We will see. All right, looking at USD CAD, we've been trading in a big range here for 10 years. And we are still trading within that range. In terms of the shorter term, could we be forming a head and shoulders here? Not a decent quality one, no. But we could have an overall double top here. If USD CAD is really going to tank, then I'd be looking for this double top potentially to break down and head down here into about the 91, 92 area. We will see how that goes. But this has been set up for years. Nothing particularly urgent about it. In terms of the daily chart, we had an RSI 5 sell signal before this moved down on the daily. No divergence at the moment, but of course we could set some up just with a retest of the low. In terms of Australian dollar, we've finally broken with conviction over this resistance trend line here. Now, I don't have an obvious bottoming pattern here, and we could be forming a big bear flag. We could be forming a triangle of some kind, depending on whether we go much higher than this, but we will see. We had a little sell signal here, and that has failed, and we really spiked up the dollar, and we spiked up pretty hard on NZ as well. Hang on a second. Apologies. Right, NZ also had a little IHS which broke up with a target in the, hang on a second. Yeah, I've got I had two alternate IHSs here. The first one's pretty much made target at 6,100. No, that one failed. So this one's got a target at 61.21. That's still got a target on the upside here. I am wondering about retest the low on US dollar and associated currencies, and it wouldn't be a bad fit with heading up and making this target. Bigger picture, what does that tell us about direction? It tells us we might be breaking up from this triangle. Let's A, B, C, D, E. Okay, this could be the start of a centered mood. If you count this triangle here, this would be, normally I'd count it from this way, A, B, C, D, E, partial wave down, and then a break. I think this is may well be breaking up, and that is the obvious direction for this to break up. If that's the case, then we've got a potential level bottom here. And so if we saw a sustained break up over 65.20, that could get us over this larger possible level bottom resistance, but it might be a bit too large up here in the 74.70 area. This could be the start of a big bull move on NZ, so I'll be watching that closely. Short term, no divergence. Again, we've seen a spike high. Retest that, and we could get some significant sell signals spraying. All right, let's have a look at bonds. And bonds, hang on. All right, ZB. Now, ZB's just been trading in a range really the last few days. I'm thinking that sooner or later this is going to resolve into a move down. Obviously, you've got quite a lot of resistance at where the new weekly pivot and monthly pivot are. I'm thinking that might hold and head down. Now, we've got a large head and shoulders here, which is broken down with the target and the 112.04 area, and I think that's got a pretty good shot at making target. We had a buy signal for this latest little move, and that's made the possible near miss target. We will see. ZN also has a big move down schedule. We've got a double top that's broken down with a target in the 110.17 to 110.12 range. Then we formed a triangle that broke down. I think this looks like a bear flag, forming possibly even another triangle. Normally you wouldn't see one form straight after the other. Again, we've got a buy signal. Again, it's reached the possible near miss target. Again, we've got a big target to the downside, which may well be coming next. All right, let's have a look at bonds on the bigger picture. And okay, TYX. Now, TYX, obviously TYX and TNX, in the event that everything goes pear-shaped and there is a flight from the dollar and there is a flight away from US Treasuries, there is a pattern for that. This is a potential inverted head and shoulders, and this could break up with a target of 9.5, which, given that these are 30-year yields we're talking about, to make that target would be eye-watering, but it would be far, far from unprecedented. That's the sort of levels we reached at the end of the 70s when they were trying to squeeze inflation out of the economy. Now, I don't think inflation is as big of an issue now. Nothing like it. But I think a loss of confidence in the dollar and a loss of confidence in the ability of the American government, or at least the willingness of the Americans to come up with any kind of plan to repay their debt, which is going up. I mean, since the debt was going up pretty fast when Trump got into office, it's since been accelerated a lot. And in terms of spending plans, if he's really planning to increase military spending to 1.5 trillion next year, then it would appear that he's not got any plans to make any plans to repay the national debt. Now, that's a problem in every country apart from the US, and the US is insulated by the fact it's got the US dollar as the reserve currency. If there is a loss of confidence that the US Treasury is a completely safe investment, and it's only natural at this stage to be getting a bit of a loss of confidence in that, then at that stage bond yields are going to go up, and it doesn't matter what the Fed says and what the Fed does with the Fed funds rate, because actually all these yields are set in open markets by market participants who are buying and selling debt. If they lose confidence in it, then like any market, the price will go down, and that means the yields will go up. So that is what I'm watching out here, and I've been watching out for that for a couple of years now. Obviously, we started forming this right shoulder back in 23. In terms of the weekly chart here, I've got a weak RSI 5 sell signal fixed, not delivered anything so far, and it's only a weak signal. What I would say is this looks an awful lot like a bull flag, and that's breaking up. In terms of the See a closer look at the flag here. I've got a nice looking rising megaphone, it looks like here at the moment. But the main thing I'd look at here is, hang on, I really need to do the I really need to do the 60-minute chart on this, get around to it. But we've got little inverted head and shoulders here, and that has broken up with a target at about the 50.1 area. And at the moment, I'm not seeing anything to suggest that isn't going to make the target. And this is the equivalent of the one on the ZN chart, although this is the 30-year yield, not the 10-year yield. In terms of TNX, same IHS, looks like a triangle forming, and normally I'd expect that to resolve up to the upside. We had an RSI 5 weekly buy signal, and that's now reached the full target. In terms of the daily chart, this is a closer look at the triangle on another version of the weekly. In terms of the daily chart, no current divergence. Again, you can see a triangle and a triangle within the triangle, and we are trying to break up from that at the moment. I'm liking the upside here. At least that is the obvious direction to be going. In terms of the hourly chart, I've got an IHS here. This is the better IHS, although there is an alternative here I was considering. But this is the better IHS here, and that's broken up with a target in about the 43.9 area. This could be a bull flag forming, could see a little lower before it goes higher, but I'm liking that target. And I'm not seeing anything at the moment to suggest that won't happen. In terms of FVX, I charted this just to basically get another opinion from the 5-year yield, because this is the 5-year treasury. This is forming what looks like a very, very clear triangle, and it's been forming it for 3 years. And the obvious area for this to go afterwards is up. A triangle like this will generally follow the preceding direction, which of course was up. So again, more fuel for the fire in terms of yields heading up next. In terms of the Fed and who takes over the Fed, etc. One, they have a voting system there, which means that the Fed leader doesn't set rates. And the second thing is that actually, I wrote a post about a year and a half ago. I'm going to be doing another post in the next couple of weeks talking about it again. But actually, the Fed has cut interest rates 1.5% over the last year and a half. And in that time, interest yields went up. And what I noted over a year ago in my post was that actually the Fed doesn't control interest rates, and it never did. And the danger of putting down interest rates and yields going up anyway is that it becomes obvious to everyone that the Fed doesn't control interest rates, so it actually matters, and people pay less attention to the Fed. That hasn't been a huge problem, but obviously a lot of people have noticed. In terms of TLT, TLT likely heads down too, although to be honest, the best looking pattern here is potentially bullish. It doesn't fit with any of the others. I have continued tracking it just in case. We're in no danger of breaking up from it at the moment, and actually the longer this goes, the less credible this is as an inverted head and shoulders. You can see I tracked out where the targets would be a few months ago, and we've just been continued drifting sideways since. In terms of the daily chart here, no current divergence. We've got a head and shoulders here, which is a nice one, and is broken down with a target in about the 84.7 area. And again, we're just consolidating sideways, and I'm thinking we will break down and we will likely make that target. So we shall see. On the hourly chart, just a better view of the same head and shoulders, which is this one here. And it's nice. We shall see. All right, great. Let's have a look at oil. Okay, oil. We've been seeing some action this week. Now, I've got some more to say in terms of the bigger picture on here because obviously there's a very bullish potential setup here, which I've been tracking for a long time, and we could be starting to see that play out. Now, I'll talk more about this when we're looking at the bigger picture charts, but in the short term, we have broken up where I've now got the monthly pivot support at 62.45. I'll be watching that. Could be forming a bull flag here, possibly a messy top. But at the moment, we've seen a very nice move up, and I've got a fair amount of reason to think it might well go higher. In terms of heating oil, we had a nice looking channel here, which was limiting how far it could go up, and then that broke up. So that is now broken out of where it was. We had a sell signal that failed. Nice uptrend. In terms of RBOB, Again, going up nicely. We've got a potential little level top here, no current sell signal, and no obvious larger resistance trend line at the moment. In terms of NG, the spot prices went down hugely at the end of the February contract, as I was saying, but since then it has now gone up considerably. So it may be that we're going to be seeing a squeeze that lasts through into the March contracts. We will see how that goes. Not sure what the reason is here, but got to respect the trend at the moment, and I'm not seeing anything at the moment to suggest it's about to turn. No current negative divergence here. We made the possible near miss target on this, so it didn't fail, but obviously, we're heading up at the moment, and we've got no negative divergence to speak of. In terms of the bigger picture charts on WTIC, this is what I'm looking at on the. This is the basically CL. This is a nice looking little double bottom here, which is broken up with a target in the 68.970 range. Now, this here is a potentially much larger double bottom, where if we were to then get a sustained break over 78.4, then the target would be in the 172 to 101.82 area. Now, this is something I've been looking at on this chart here. We had this lovely falling wedge. We saw it break up. We've seen a low retest. This is a very classic setup to get a bull move, a bottoming setup. Now, obviously, we've got key resistance only on a monthly close basis. We intra-month closes closes don't count. And when you do see a breakup, as you see here after 2 months, or here after 1 month, you don't necessarily hold back over it. Here we broke below, that rejected, and it went back down again, and that's the last time we were significantly over the daily middle band for any period, back in early 2023. But this is a nice looking bottoming setup, and I have been thinking, and I've been talking about this for a while, but I'll just obviously talk about it again. I have been thinking that we would have a potential reason for this to go up. Now, obviously, Trump's been quite keen for oil prices to stay down, and demand, to be honest, has not been doing particularly well since he got into power. So demand has been weak. There's been a decent surplus in the market, but that surplus is only 3 or 4 million barrels of oil a day. Now, 3 to 4 million barrels of oil. Now, that sounds like a lot, but Iran, which may be about to fall into major problems and stop exporting for a while, that produces 3 million barrels of oil a day, and Russia produces about 9. Now, in terms of Russia's having real problems getting its oil to market. It was selling a couple of million barrels of oil a day. Million barrels of oil a day to India. That's now down under 1 million. Their shadow fleet is now being mopped up by various people because, of course, they use old ships and fake registries, and basically they're smuggling. So they're now being their ships are now being taken by Europeans. They're now being taken by the Americans, and this is causing a problem. It's meaning that much less of the Russian fuel is going to market. Now, Russia actually has been producing about 9 million barrels a day. What happens when we actually lose 6 million or 8 million barrels a day off the markets? And I think we might have lost more than that 4 million barrels a day already with disruptions with supply from Iran and Russia. What happens when you get down into a significant deficit? You see a squeeze, and this could well be the start of it here. And the main thing I've been talking about here is the possibility that we'd see this sustained breakup over, which would that be, 70, well, you can see it here. It's a 78.4, sustained breakup over there, and we could see oil back over 100. And actually, one of the classic times you see this is with wars. Wars in the Middle East. I was a bit surprised last year when we were getting issues in the Middle East, and there was no real reaction on oil at all. This would be more typical. We've seen some huge spikes up in oil when we are getting significant wartime disruption in various areas, and this would not be a vast move in the great scheme of things if you look at the long-term chart. I'm thinking this may well happen. We will see. Looking at heating oil, of course, we've got the same wedge. There, we actually had an inverted head and shoulders which broke up and failed, and you can see that here in black. But we've got a possible alternate inverse head and shoulders that I've been talking about, and you can see we've almost reached the new inverse head and shoulders resistance. Sustained break up over that. I've got a target in the 3.45 area, and we will see. All right. In terms of I've got the my chain of thought tracked on this over the last few months. On gas oil, we've got the same falling wedge, and we've seen the break up, and we did actually get lower here. So I expanded the wedge, so this wedge is unbroken at the moment, and I've got wedge resistance in about the 2.04 area. Now, none of these, I always like to see daily buy signals, weekly buy signals, ideally monthly buy signals. We haven't got those, but we have got a very nice looking overall double bottom here. Possibly might possibly evolve into an IHS, and we've got a nice looking falling wedge from this last high here, which is now broken up. I'm looking for this could be an asymmetric double bottom, break up directly, or possibly form an inverse head and shoulders, but I think this has got a shot of getting back to this main resistance here. And if we see a sustained break up over here, well, at that point, we could see what would actually not be a vast move here, but we move back up into about the 3.05 area. I think that's potentially on the table here, and I'm thinking we could see that over the next year. We will see. In terms of the daily chart here, no current divergence. We'll see. All right, natural gas. We actually had. It's not quite showing up on this chart, which is odd because you see it get up to 5.65 here. I actually saw the spot price, but probably at the time where it had switched over. I did say there was obviously a big squeeze in the February contract. I saw prices up in the 6.5 area, I think, which was very high. You're not seeing anything as high as this, but we pretty much made it to this double bottom target, first double bottom target here. It may be that we're going to get closer, but I was saying that when we reached the end of the February contract and this started reflecting the March contract, we were going to see a big decline, and we did. And we declined back into about 3.5 area from the 5.5 area. We've now come back about half of that, which isn't a reactive bounce, because actually this difference was all on the futures. So it wasn't really that the price declined; it was just the March future was always at that price. It was just that it rolled from one future to the other. So there wasn't really a real decline there. So this isn't a bounce on that decline. I'm wondering if we might actually get back up into that area anyway. We will see. But it does look as though we've got a supply squeeze somewhere, and that this is a response to that. We will see, but we're holding the monthly middle band at the moment pretty comfortably. So with a back test last month, so we'll see. In terms of could this be a bear flag forming? Yes, and actually this trend line still looks pretty good. But we will see. It's not a great looking bear flag, and I wouldn't be surprised to see it go higher. Although I would be thinking that was probably the result of a supply squeeze rather than demand. So you can see the big decline here as we switch over the contracts, but we've made back half of it there. I'll be watching it very carefully over the next few days. No current divergences. All right, let's have a look at precious metals. Right, now we had a very dramatic week last week, and I have to say I was laughing at some of the things on Twitter talking about the fast decline, and there's 5 trillion wiped off of gold, and I was thinking, yeah, it got back to the price it was last week, because obviously the rise was going up so much. But I was saying that it was now going up so fast that it wouldn't be surprising if we saw a big pullback, and we've seen a big pullback. Now, it may be that we've made a swing high here. I'm not thinking that this is the end of the bull market altogether. I could be wrong, but I think this has got more to go. And I think there's going to be real trouble on the US dollar is ahead of us. I don't think we're seeing it right now. So I think gold is going to potentially take the crown in terms of the most favorite bank reserve, central bank reserve over the next few years, and the other precious metals will have a big role too. Maybe that won't happen, but I think there's a decent chance at this stage that it will. And because the price of precious metal of gold has gone up so much, I think gold's now worth about 30 trillion worldwide, and the i.e. the total stock of gold around everywhere. And we've got significant other precious metals too at decent values. We're now actually looking at the kind of numbers where potentially it could start replacing the US dollar, or at least just be a much larger part of central bank reserves. So we've seen a pullback here. It's been very sharp. We got back from about over 5,600 to 4,700. I am wondering about a possible high retest here. We will see. There isn't a very obvious bull flag here, though. In terms of the SI chart, no bull flag here either. Was there a head and shoulders here? Yeah, but it was so ugly I didn't post it, which is a shame. But it would only have got us down to the monthly pivot area, and actually it went significantly beyond that. The head and shoulders here, just for interest, would actually have been, this would have been the left shoulder, this would be the head, this would be the right shoulder, left shoulder and right shoulder at more same levels. But to be honest, it was just too ugly. I didn't want to put it in. That's and really, I do think the uglier ones have less of a chance of making target. But for whatever reason, it went down. We've seen a very sharp decline. We got down from 122.4 to 73, and this is silver's now fully back to what it used to be in the last bull market, which is a kind of leveraged gold. Goes up more, goes down more. So again, I'm wondering about a retest of the high. No current positive divergence. Palladium, very sharp decline as well. Actually, this was really interesting because you can see on Palladium and Platinum that we've got the same weekly and monthly pivots, and that's because the high of the week and the high, low, and close of the week were exactly the same as the high, low, and close for the month. Just showing that basically the highs and lows were both made in the last week. So very, only really in this kind of market. This again, I'm wondering about a possible retest of the high. We will see how that develops this week, but I am thinking we might see a retest of the lows on the dollar. We may see the retest of the highs on here. I wouldn't see it quite as tight close as that, and I don't think if the dollar stabilizes for a few months that we're necessarily going to see big declines on gold. I'm not convinced the top of the bull market is in. We shall see. All right. In terms of HG, and I've been doing more reading on this. There is a shortage of it in terms of the data centers, which seems to be almost the only manufacturing going on in the US at the moment, because everything else seems to be contracting. Here, we saw a breakup over historic levels, and we've seen a very sharp pullback. This could be a bull flag, and we could still see the bullish breakout, but at the moment, we've seen this was a sharp projection. Oddly, very similar to the precious metal ones, although normally these do not trade together. All right, let's have a look and see how that looks on the bigger picture chart. Okay, let's have a look at the charts on there. All right, gold. Obviously, this is wild. I mean, the silver chart is wild too. I mean, this is, 2,800 back in, well, basically the start of 25, and it's doubled. This is a wild move. Wild move. I mean, especially as this 2,800 is basically an all-time high already. So this has been an incredible move. I don't think it's done yet, but I could be mistaken. I'd be expected to see some negative divergence, and we haven't gotten it yet. We've seen, looks like the Himalayas on the RSI, but we've got no divergence yet. And I'm thinking pullback retest would be more usual. In terms of the weekly charts, we do have quite a lot of negative divergence. We've got an RSI 5 sell signal fixed, and actually we're seeing a lot of these fix on the precious metals last week. On the daily chart, very sharp decline, but you can see, and this is again, I did actually think about posting this and saying, yes, this vast decline has led to a bullish backtest of the daily middle band, but obviously it closed above it. But just goes to show how wild it had got by the end, that this vast move down, actually only this of, well over almost 15%, I think. It's only got us back to the daily middle band. No current divergence on here. Could get some a sell signal brewing on the RSI 14 if we saw a retest of the high. Silver, where again, what a wild move. This was the all-time high. Amazing. Just amazing. It's actually, this wasn't the all-time high, because the previous all-time high, which it held, was made in 1979. We went through that, and then it more than doubled in 6 months. So hell of a move. Again, no negative divergence. We do have negative divergence here, though, on the weekly chart, not the monthly, but we had a weak RSI 14 sell signal brewing here, that fixed. RSI 5 sell signal we had brewing, that fixed too. On the daily chart, we had an RSI 14 sell signal fixed, and we're down below the daily middle band. This, I'm thinking, is probably, may well be setting up for a larger retracement. I'm not thinking this necessarily needs a retest of the high, though, because in terms of forming a topping pattern, if we went back to 121 and then formed a double top, then I just wouldn't believe a target which got us back into the 20 to 30 area. I don't think that would happen. In terms of platinum, palladium, we also had an RSI 14 sell signal fixed and an RSI 5 sell signal fixed. We've got a nice looking IHS here, which broke up with the target in the 2550 area. It's not really supported by any of the others here, this pattern, because all of them, most of them had patterns that broke up, but they've all made target, notably the one on platinum, which was a very nice looking inverted head and shoulders with a wild looking target up here when it first broke up, and obviously made target and significantly beyond. That's already made target. I quite like the platinum setup and the palladium setup, but might be that we could see a fell here. We've got a daily RSI 14 sell signal fix. Could this be a double top? Potentially. Do I think that it's got a reasonable chance of getting back into under 1,000? No. Nonetheless, the bull market is finished, and we see a really harsh retracement. I think this much of this increase in precious metals is here to stay. In terms of platinum, no divergence here. On the daily chart, we've got an RSI 14 sell signal fix and an RSI 5 sell signal fix. Chances are that these will make target. That's the weekly chart. On the daily chart, RSI 14 sell signal fix and very clear break below the daily middle band. All right, looking at copper. Copper, you can see the break up over this historic resistance, which was a very nice looking resistance trend line. Now it could be that this is a bearish overthrow, and we're about to see a very sizable move down. But against that, apparently there is a very significant shortage of copper at the moment in terms of what they're using in the data centers. So it may be that this is just a pullback before it breaks up and goes to even higher highs. Although this is actually a chart that goes back to 1970s, so you can see that we're at pretty elevated levels already. But in terms of the data centers, well, I don't know whether you guys have noticed, but actually the prices of some SSD hard drives have more than doubled in the last few months. That's because of data center demand, and the price of RAM, commercial RAM, used in laptops, used in consumer computers, has since my son bought 64 gigs of RAM for a very high spec laptop about a year ago, the price of his RAM that he got, which was pretty nice, has tripled. And that's because they're also, the one thing that the data center is doing at the moment is hoovering up vast amounts of memory. In fact, Micron, who own Crucial and one of the biggest, 30 years pretty much, have been in the consumer market and been a very, very big player there, have said they're in the process of exiting the consumer market. Exiting, not reducing, not selling off their interest in, but exiting the consumer market to just focus on data centers. Personally, I wonder how long the data centers are going to provide them demand. I'm pretty sure it's not going to be 30 years. But at the moment, the data center craze has gone so far that it's in the process of doubling the price of consumer computers. So wait for that in the inflation numbers as well. But if we can do that, then, well, maybe we could see copper at $10. We shall see. In terms of the weekly chart here, no current negative divergence on copper. We do have an RSI 14 sell signal fix, but since that fix, obviously we did that. So we will see how that goes. But we've seen a sharp retracement with precious metals at the moment. I'm not convinced. Well, this was a very impressive move up, and this could be a breakup. I'm watching with interest to see whether it becomes one. All right, but you can see here, extend the trend line across, that was a significant looking break. All right, in terms of GDX, I've been redoing the charts on that. You can see again, it's been a wild move. We've seen a big retracement. We have got an RSI 14 sell signal fixed on here on GDX, and we've got a possible RSI 5 sell signal brewing, but not yet fixed yet. On GDXJ, we've got the same. I'm thinking we could see a big retracement here. Certainly, I think both of these are wildly overblown, but we will see. In terms of the daily charts here, no current signals here. You can see a very large move off the high, and I wouldn't expect the retracement to finish after a day or 2 days generally. I'd expect it likely to last longer than that. We might see a retest of the high, but I'd be thinking we're probably going to see the precious metal market settled for at least a couple of months. But I could be wrong. In terms of the hourly charts here, not really seeing a lot. No divergences on the dailies. You can see we've broken this support trend line here, but because of this wild move, has made my longer term charts on the dailies and the hourlies look well. The earlier part was actually obscuring the later part really because of scale. So I've moved these and made these much shorter term to keep a good eye on what is happening here. But in terms of the short term here, no divergence from here. But chances are we are topping out, I think, for a swing high. And a period of consolidation or retracement. All right, great. Let's have a look at the other commodities. And all right, KC. I've got an overall falling wedge here. If that's the case, then we could find support at 325, and that's not an area I would necessarily be looking for support. On the daily chart, I'm thinking it'd go a lot lower, but I am thinking this is a potentially decent looking wedge, so we will see. No current positive divergence. Sugar, I think we've got a bear flag which is broken down. That should, unless this forms into a larger bull flag, and I think this has been forming too long probably for that to happen, but it's happened before. I'm leaning towards this getting back down to the retest of this low here in about the 14.04 area, and it hasn't reached that yet. In terms of the cocoa chart, I'm wondering about a rally here. We've got a 60-minute buy signal fixed. We've got a pretty nice looking little level bottom here. Sustained break up over 4,500 could get us back up into, well, about the 5,000 area thereabouts. In terms of CT, we've seen a breakdown, potential larger double bottom here than this one here, which has already failed, of course. We will see. Jury is still out. Lumber, we've got a nice looking double bottom that broke up here, but has really been doing very little since then. We will see how that goes, but it could be bigger picture. I'm leaning towards the downside, and I don't think they're very short of lumber on data centers. 60-minute buy signal fixed here as well. We'll see. ZW, we've got a double bottom here, which has almost made the target. Could be topping out here. 60-minute sell signal fixed. Possible little level top here. We'll see. Corn, this looks like a bear flag. Setting up a retest of this low. In terms of soy, looks again like a bear flag, which has started breaking down. The alternatives, we've got a double bottom, which is broken up with a target in the 1104 area, but this is also a pretty nice looking bear flag megaphone. And this could be breaking down with a target at a retest this low here at 1037.5. Only one of these can be true. And at the moment, I'm thinking probably the bear setup's looking more convincing. In terms of soybean oil, we've seen a move up here. And we've got a nice looking double top, which is trying to break down with a target in the 51.65 to 51.9 area. So we shall see how that goes. On live cattle, we saw a double top, which broke down here and failed. And we've potentially got a larger double top here, which it's a nice looking pattern setup. We may see that play out. At the moment, it's still hanging around. If we see a break up from here, then this all gets cancelled, and we're looking at a larger pattern from this low. In terms of the lean hogs, we've got a nice looking rising megaphone here. We've got a sell signal that's reached possible near miss target, and we've got a potential head and shoulders here, which is forming or possibly is even broken down. But if we get back over this, if we get back up to 96.25, I'd be looking for a high retest. But I'm thinking this could well go lower, or it could find support when it gets down to this trend line here, which is currently in about the 93.5 area. All right, great. Let's have a look at those on the big picture charts. And coffee. Now, coffee, the main thing I'm looking at here is the double top, which is broken down here. Now, this is part of potentially a large double top. This is a nice looking double top. We have seen a rally. We've seen a retest this low. This is an inflection point, a bit like the one I was looking at on the US dollar earlier. Either this is a double bottom and gets us back up to the highs, or this continues down to the downside. Now, on the bigger picture, I'm just basically looking for reversion to the mean. This was at the high end of historical trading, and we obviously went way up from that. And I think we are reversing to where it was before, but we could do another retest of the high first. We will see. And we didn't quite do a full retest this high here at 4.408. So little inflection point here. We'll see which way it goes. In terms of sugar, bigger picture, I've got a target down here, open head and shoulder target here in the 9 area, and I think we may well make that. We've got no current positive divergence here, but on a retest of this low, we could set up a bit. In terms of the weekly chart, no current divergence really. Leaning towards seeing a retest of this low here at 1404 next, and that was the obviously little bear flag that I was looking at on the hourly chart. I would note on the weekly chart here that we've been holding this weekly middle band as resistance now for over a year. And that is the area that needs to be broken up if anything bullish is likely to happen on sugar. In terms of the daily chart, we've got a weak RSI 14 buy signal fixed, which I'm not paying much attention to. I'm leaning towards seeing a retest of the low and then probably a continuation downwards. In terms of cocoa, cocoa again had broken out a long way from its historical norms, and it's been reverting to the mean pretty hard. Am I looking at these double top targets seriously? No, I think they're too low. I think anything below 2000 is too low, but I think it's got a pretty good chance of getting back to 2000. That's still halving from the current level, which is a long way below. Which has lost basically 2/3 of its value from here. In terms of the monthly chart here, we've got a RSI 14 sell signal fixed, and that hasn't made the target yet, and I think it's going to. We do have a possible RSI 5 buy signal brewing here. We could just override that by continuing down. In terms of the daily chart here, we've got a possible RSI 14 buy signal brewing. We've got a possible RSI 5 buy signal brewing. Possible bottoming action. I am wondering about a possible rally here. Looking at wheat, no current divergence. We've seen a nice little rally here, wondering about an overall triangle forming here, basically from this high. And I'm wondering if that would be the case, then it would probably be a bearish triangle. Looking at corn, we've got a lovely looking double bottom here, which may play out sometime in our lifetimes, but it hasn't been enthusiastic. We've just been kicking around really for a few months since this has been forming. Could be this is going to get something to the upside, but to be honest, I think the biggest market which is important to this chart is the American market, and American farmers are down in the dumpsters, and I don't do the beef chart, which is probably the one that's looking the best at the moment. In terms of soybeans, we broke up from the flag here, and I do not have an alternate flag. But bigger picture, in the absence of Chinese buying, I'm finding it hard to be too optimistic about it. In terms of the chart here, I had a little head and shoulders here, which I never marked in, but that long since made target. This could be bottoming action, but I think this is probably a counter trend rally before it goes down again. No current divergence. In terms of cotton, we have been drifting sideways so apathetically for so long. I'm wondering whether we might see a retest of this low here. These lows here around 58. We've got a nice looking double bottom here, but we've got absolutely no sign of it breaking up. In terms of lumber, we've got this beautiful bear flag which has been forming since the start of 23. We've got if that bear flag breaks down, that would have a target at a retest of this early 23 low at 35250. We've also got a double top which is broken down here with a target basically at the same level. I'm waiting for this flag to break down. It's been a long wait. We do have this double top which is broken down. In the meantime, we then rallied up. We got bit lower, then we rounded up 50%. It may be that this isn't going to deliver, but overall it looks pretty good. And I don't think the lumber's a big issue in the data centers, and other demand has been thin at best. So really, I'm a bit surprised this hasn't gone down already. All right, great. Let's have a look at crypto. So bear with me a moment and let's have a look at that. Okay, now Bigger picture, obviously, I called a likely end to the bear market back in about November, bull market back in about November, and we had this double top form, and we had a target for that down in the 88 area, and then we moved on to a situation where we were rallying from 80.6k. We formed a bear flag that broke down. We formed a larger bear flag, and that broke down with a target in the 80.6 area. And what I was talking about was the possibility that it would go down to the next support level in the 74.4 area. Now, that was almost reached over the weekend. So I've really got to get a post out about that, but obviously I've been talking about it every day. And two things to note about this chart. One, this is a falling channel, and it's a nice one. Potentially, we could, if we break the support, we could go down considerably lower. But this is a very, very big support level, and as well as that, this is also a potential head and shoulder neckline. Now, what I'm wondering is if we might find support here, go up and rally into 3 to 6 months, maybe 2 to 6 months, possibly up into about the 110 area, and then possibly start the main move down in time for equities possibly to join the party and to drive it further. Now, there's a couple of things to say on this. The first thing is, one, equities, I think we're heading into a significant high this year, and this could be a major bull market high. I think the American economy is in the toilet. I think AI is a bubble, and I'm not seeing anything optimistic. And really, much as I love the US, I don't think we've ever had, not in my lifetime, an administration quite so proudly economically incompetent. So I don't think anything they think is worth remembering. And I think more or less everything they've done economically is wrong. This has, and optimism does not keep, to a certain extent, faith keeps economies afloat in part, but optimism isn't really, and wishful thinking aren't really a big part of that. And I think we're seeing a lot of wishful thinking, and I think prices are wildly high. And I think this could drive potentially crypto down a lot lower as and when equities turns. And this could be a head and shoulders. Doesn't necessarily have to be, but I am wondering about finding a low down here, seeing a rally back up into the 110 area over 2 to 6 months maybe, and then possibly heading down from there. We will see. But actually, yeah, so we will see. In terms of the flag here, obviously that made target. I completely nailed every part of this process pretty much, so I must do a post referring to that tomorrow or the next day. But this is where I was thinking we would find support, and we're pretty close to that. In terms of Solana, no really big pattern like that here, but what I've been watching is the daily chart where we had a head and shoulders breakdown with a minimum target of 95, extended target down at about the 88 to 90 area, I think. We haven't got a channel, we've got a potential falling wedge with a couple of potential trend lines here, which I'm watching, and I'm thinking we may well find support here and see a decent rally here. That kind of decent rally could give us this could be, for instance, an inverted head and shoulders here. I'm thinking we could see a very decent rally that could get us potentially up into the 200 area. We will see. In terms of divergence, we did have some positive divergence on the daily, but this last move down has killed it. So I'm thinking a bit of a rally, bit of a retest, and we can set that up again. In the short term, we've got a possible... Nope, we haven't. We've got a possible 60-minute buy signal brewing on Bitcoin. We've got one on Ethereum. Let's just check the one on Bitcoin. That's 15-minute. Okay. Looking at the hourly chart, yeah, that is we've got an RSI 14 buy signal fixed here on Bitcoin. On Ethereum, we've got a 60-minute buy signal fixed here too. We don't have one on Solana yet because it hasn't quite done the retest of the low that I was expecting. 96, 93, we only made it down to 97, 97. Might still deliver that. But I am thinking we might be forming a low here, but we're not necessarily there yet. But in terms of where this was going. We haven't quite reached the areas I was talking about. I was looking for a minimum retest of 95.24 here. We've got down to 96.93. Normally, I would expect that full target to be made. In terms of Ethereum, I've got a target down in the 2070 area, and we've made it down as far as 2220. Again, that's not quite made the target. And normally, less so than Solana, but really I'd kind of be expecting to get closer to the area there. I'm not convinced this move down is complete. I'm thinking we'll probably see a bit more downside, but I'm not expecting to see necessarily an awful lot. And I am thinking we could make a swing low here that could last for months and get people really pumped up about the bull market, new bull market highs, but I don't think we'll see new bull market highs. I think we saw the bull market high at the end of the year last year, and typically bear markets in crypto last a year or so. And that means that I would be looking for the low on that market in about December next year. Sorry, December this year. That means that I'm not looking for that low now. Is it possible? Yes. Why are people so excited about the possibility on Twitter? Because they've got short time horizons. No one wants to look a year ahead. It's not exciting. But the fact is, that's how long they tend to last. And that's pretty quick. In terms of topping, I watched topping and bottoming patterns form on bonds or the dollar the last 5 or 10 years. Getting a whole bull market out of the way in 2 or 3 years and a bear market out of the way in a year. These are not long time scales. But obviously, I've got a slightly different perspective to most others. All right, great. In that case, I think that's a wrap. Everyone take care. Pretty exciting stuff this last week. Next week, I'm watching to see whether equities can make do some damage to the upside, and I'm particularly watching that all-time high retest on NDX. We'll see if we get it. All right, cheers, guys. Catch you again Wednesday. Everyone take care.